So it's good to be back, and I hope you all had a good weekend. Um, Last week we touched on three sections of Nigerian tax act. We talked on the first section of it, which was the objective of the Nigerian tax act. Then we went on to talk about the application of it in section 2. And the section 3 of it, we talked about where the tax authority is deriving the power to tax everybody, where they're deriving it from. So today we will be looking at section 4, which is to help us understand what exactly are the income or profit or gains that are chargeable to tax. I do need us to really understand that this tax law really do cover all of the income. So that's why I decided to really read out from the tax law itself. So what I have on my screen now is the tax law as gazetted. And where I want us to pay attention to today is from here. Right. So from here to here to here for now, you know, to here for now. So let's look at this place now. So it says that income, profit, or gains of a person accruing in Nigeria or derived from Nigeria. So what this means is the income is happening in Nigeria, right? It's accruing here. Derived from means that you may not even be in Nigeria, but you are deriving the income here. So the question of I don't live in Nigeria does not occur. So what are this income that we are referring to? So the first thing, just let's look at what this A is saying, that any profit or gains from trade, okay, or business. So who are those in trade? If you trade is buying and selling, I believe you know. So if you have you are into any economic activity, physical activity that you are trading with an economic agent, then you are part of the person we are talking about. Another thing that you need to take cognizance of is the fact that we are also talking about businesses, right? If you are a business owner, whatever your income is from business is also chargeable to tax, as we can see here, right? And we are also talking about profession. So if you are like me, that you're an accountant, or you're a anybody into any kind of profession, maybe you're a lawyer, you're an accountant, you run a medical practice, whatever profession, right? You're an architect, you are going to be, your income is chargeable to tax here. Maybe what you are is even vocation you are doing. You are a vocation guy. That's artisans. That's what it means. You've learned one vocation or the other. So your income is chargeable to tax. That's what subsection 1A is talking about. Let's proceed quickly to section subsection B, right? So we finished here. We finished here. So let's proceed to subsection B. So it talks about royalty, right? If you royalty, as you know, it can be from usage of a physical asset. Maybe you have that you have a land that so anybody is taking is extracting anything from the land, and you have given them the right of extraction. You collect royalty from it. So you need to you will be charged to tax on that. Also, if you collect rent, uh, if you have a property and you have given it out to people for rent type purposes, you will pay tax on it. If you whatever you do, you charge fees, right? People give you economic activity and you charge them fees. You will pay tax on it. Any interest at all that you may have, that somebody is paying you something for usage of your physical or intellectual property, you will have to pay tax on it. That's what this one is saying, that from a right granted for use, exploitation, or occupation of the property, whatever you at all that an economic benefit that has accrued to you by virtue of giving your property to anybody will make such income accessible to tax. Now let's move quickly to C, which is section 41C. Section 41C is talking about dividend. Now, whatever dividend you collect from any business at all, so you bought shares and you bought shares and you have dividend on it, you'll pay taxes on it. If you have any premium on any transaction, you will also have to pay tax on it. If you have charges or annuity, anything annuity, is also taxable. That's what it means from here. So let's mark that. If you have any question, please do not. You can just put your chat, respond to any of the comments in any of the platform you have. I will come back to take the questions when we are done. Now, let's move to section 41D. Section 41D talks about fees, dues, allowances, or any remuneration for services rendered. So back here again, if you anything at all, fees, dues, allowances, or remuneration for a service you render is taxable. Is taxable, right? Now let's go to discounts or rebates. So if you buy anything from anyone and there is a discount that you have enjoyed, the law is saying that you will have to pay. You will have to pay taxes on it. So let me try to clear that, right? So if you are buying a car or whatever, right? And you enjoy discount from that purchase. That discount what that discount will do is it will give you more economic right or economic benefit. So that discount is taxable. That's what the law is saying. Anything at all that makes you, that benefits you, you know, at the expense of the tax authority, you will have to part with something, right? In form of taxes. Now let's look at what is section 4(1)(f) saying. Disposal of money or money instrument. So if you had gone, you have investment in shares, right? You will need to pay some taxes on whatever gain that you may have that must have accrued to you from disposal of such financial instrument. Such financial instruments may include treasury bills, may include bonds, may include shares. Gains from them are taxable. Please note, we are talking about the income, profit, or gains from assets. I do know that as we proceed in this law, there are exemptions. So, but we are not there yet. We're just trying to read what the law is saying in this section of the law. As we proceed further, we will see which of this, what is the extent of exemptions that we may have in this. It is my wish that everything is exempted from tax, but we are limited to whatever the tax law has provided. Now, section 1G talks about income, profit, or gain from disposal or lending of securities. So you do have, in the capital market, that's what is called security lending. What that means is you may study the market and by your projection, you feel that the market may still come down in future. So because you are such an expert in it, you approach those that have securities that they want to lend to you. So they'll give you some number of shares and you go and sell it. When you sell it, you will warehouse the money somewhere at the particular time in future when you have agreed to return the shares. Then you will take the money to go to buy back the shares. So after buying back the shares, whatever is left is a gain to you. So the law is saying you need to pay an amount, a particular percentage of it as profit, as tax, right? Now, the next one is what I believe a lot of people will almost scream at. Prizes, winnings, honorarium, grant, award, and laurels. So if you win a prize or you win a gamble or honorarium as it is, anything winnings, that amount of money is taxable. A clear example is the 150 million naira won yesterday by a certain at the Big Brother house, right? So that 150 million naira that we see is taxable in the hand of the winner, right? So I believe she's going to have the tax authority will be very interested in collecting what is due to them from that. Moving on quickly, let's look at what the gains from disposal of property or fixed asset. So if you sell your fixed asset, whatever gain that may accrue to you from there is taxable, right? If you sell your house, the profit from there is taxable. Also, moving quickly to section 1J is digital or virtual assets. I know a lot of youths are in this space. You trade currency, you trade FTS, you trade crypto, online token. All of the gains that you make from there are not outside of the tax region. So you need to understand that and know that that is taxable. Now, the final part of here is how the government try to, how they try to capture every other thing, right? Yeah, they say anything that has not been mentioned from here to here is now in this J. So if there is anything you do that has not been mentioned in this section A to J, is now taxable. I hope you understand. So if there is any part of anything you do that you think has not been mentioned, right? It has not been mentioned. This color, this section one, section 4, subsection 1K is capturing everything that every income that is not mentioned in this law is in this K. So that's to tell you that there is no escape route for any form of income at all. Right. So that's what subsection 1 of section 4 have for us. And I do know that many people may feel a little bit apprehensive at this time, but there's really nothing we can do at this moment. We are only talking about the law, right? So how about individuals? That's for companies. So let's move to this aspect of the law. So let's move to income from individual. Section 1, section 4, subsection 1, it's about business. So individual here now. So come with me if you earn salaries, wages, fees, allowance, compensation, bonuses, premiums, benefits, or other perquisites allowed, given or granted by any person to any employee other than payment for expenses incurred in the performance of the duties of the employment, and from which it is not intended that the employee should make any profit or gain. So let's break it down. Everything that you enjoy from your employment, i.e., you are given your salaries, your wages, if you have benefit in kind, if they bought and gifted to you an official car, or maybe you live in the company in an apartment rented for you by the company, or you have any allowance at all, maybe any allowance you can think of, the law is saying you have to pay taxes on it, right? So your pension, annuity, or any other similar income, if you see that when you are your at this time, when if you contribute to pension, the income is exempted from from taxes at the moment because you are contributing. At the time that you are collecting the money, right, there is an element of tax there. So another thing you want to consider is if you have family businesses, right? You have family businesses, and the family business makes some form of money, and the income are not distributed to individual, right? So what the law is saying is that when it is difficult for individual to be taxed on a family business, right? The family business, we have to pay the tax before they distribute it, right? That's essentially what this means. So income of a family recognized under any law or custom in Nigeria as family income, in which several interests of individual members of the family cannot be separately determined. If you have any property that the law cannot determine who owns what, it's your family business. Okay, so the law is saying that excluding income or related assets before distribution, you have to pay before you distribute the income or the asset. You must pay taxes on it, right? So you don't want to. A number of people, we carry out trades in the name of family without giving clear distinction as to who owns what. So the law is saying that the income will be assessed to tax before you give it to individual members. Another section of interest is this part, which is income arising from trustee or settlement of trust or estate and executor of any estate of a deceased person. So if you know that we have trustee, trust is usually set up so that the trustees will hold the asset for the benefit of others, right? For the benefit of others. So when you are holding assets for the benefit of others, right, you will have to pay any tax on the income that this arrangement generates. If there is any income in this arrangement, you will have to pay these taxes on it. So when a person dies and we have executors of the estate, maybe the person has died in intestate. When a person dies in intestate, means that the person dies without a will, or if the person died with a will, we say the person we have executors of the estate. So before the final distribution of the assets, if the estate makes income, so the law is saying that whatever income that is generated from that activity, we need to be assessed to tax. That's what the law is saying. So moving on quickly, so any other income, profit or gain not falling within the preceding categories, So the law is repeating it here. If at all we have missed anything, out before, so whatever we have missed out will still be taxable under this act. So anything at all that we have missed that we have not expressly stated here, but we know is possible, the law will still assess it to tax. That's what that part is saying. So it's essentially for us to know that the law is here to collect everything that is due, so we do not have some people, not paying their taxes while at the expense of others. The law is trying to make sure we have order in the economy, right? So that those who make money should pay what is due to them, so that we can have government performing one of its functions, which is redistribution of wealth. That's essentially what the law is talking about. And just to recap, so that we are not in any confusion, right? That's why the law is trying to be as clear as possible, as clear as possible, without any ambiguity. So the law is clear, and let's stop here today. But before we stop, I want to make sure I recapitulate. I go over whatever we have done today. Now, so today we have looked at what are the income, profit or gain that the law wants to assess to tax. So we've seen what section 4, subsection 1A to K has said. So if you derive income from Nigeria, if your income accrue in Nigeria, you will pay taxes on them. Such income will include from trade, from business, profession, or vocation. You will pay taxes on them. Subsection B says royalties, fees, rent, or interest that may arise from usage of your property. You benefit anything from your property in forms of royalty, fees, rents, you will pay tax on it. If you generate dividend, premium, charges, or annuities, they are taxable. If you render any service to anyone, if you are compensated with fees or dues or allowance or any remuneration at all, you will pay taxes on them. Then we have discounts or rebates. If you benefit from discounts from your suppliers, right? Such discounts are taxable. If you do investment in anything money or money instrument, such as treasury bills, bond, shares, they are taxable. If you make any gain on security lending, also taxable. If you win Big Brother, or you win any prize or winnings, or you are given honorarium or personal grants, awards, or laurel, they are taxable. How about disposal of fixed assets? Any disposal of fixed assets, gain you have on it becomes a chargeable gain. for those of you trading in virtual assets, crypto, NFT, online token, they will also be taxable. Then we have any other income that has not been listed from 1A to 1J will be taxable in Nigeria. Now to individuals. If you earn salary, wages, fees, allowance, compensation, bonuses, anything at all from your employer that is of benefit to you or that we can regard as part of your emolument, even if they are not cash, they will be taxable. And so if you have a family business generating income or a family arrangement or a family asset that generates income that we are unable to assess income directly to individual in that family, such income will be taxed before they are distributed to members of the family. So it's either you distribute to everybody and get them taxed differently, or the law will take the taxes before distribution, and whatever that is then distributed to members of your family will no longer be taxable. So if you're a trustee or an executor of an estate, whatever income that is generated in that arrangement must be subjected to tax. Again, subsection 5 of section 4 is saying if there is any profit or gain that is not falling under all that has been listed, will also be assessed to tax. As you can see, there is really nothing has been left missing as to the kind of income or gains that will be subjected to tax. So my parting conversation on this section is that there is no point trying to look for what not to pay. Rather, my advice is to let's understand what the law allows in terms of how you can minimize your taxes and be better off. As you know, I always say that many people will get into tax trouble, not because they are supposed to pay tax, but because they are trying so hard to look for how to evade taxes when we start in January. That's where they are going to pay tons in penalties. And one of the things that's why we are doing this is to ensure that you are not part of such people and that nobody wants to throw money away. And I'm trusting that you won't throw money away by joining such bandwagons. So until I come your way tomorrow, when we will take the concluding part of section 4 of Nigerian Tax Act 2025, I'll say stay blessed and see you tomorrow. Thank you. So thank you, and do have a good evening.